Hey guys, it's Walker Deibel, author of Buy Then Build, creator of the Acquisition Lab. Recently in the Acquisition Lab, just because of the changing economic marketplace, potential buyers have been asking me what I think about the economy, and is it a good time to buy a business? Is it a bad time to buy a business? Right now there's raising interest rates, inflation. Stagflation is being forecast, all of these types of things. And what I want to say here is that it's never a good idea to make decisions based solely on economic predictions, okay? And the thing is that if you really unpack it, you can actually look at the Citi US Economic Surprise Index. Yes, that's a thing. And you will find that recently, okay, the index has been trending higher. And what that means is that the actual economic data that's been coming out is trending significantly higher than the sort of recessionary forecast that the economists have been predicting for the last few quarters. And so the thing is this is just a case in point that you can actually conclude that economists aren't actually that good. Well, they're not that great at forecasting. Okay, it's just not what they do, right? There's just too many variables that can play into the sort of external thing that they're trying to get their arms around, right? Which is why I always focus on whatever's in my control, okay? Change is the only constant, okay? So one of the things that I find so interesting is that buyers really like it when a business that's for sale has just been trending so nicely for a long time. And I get it. There's a great reason for that, right? It's got momentum. Obviously, it's pointing to a lot of internal things that are there. And it kind of points to every day that goes by that I don't actually own this business, I'm kind of losing money, right? Because it just continues to sort of trend up and to the right. And the thing is that I've owned companies like that, and I've owned companies that have been rocky, okay? And the thing is that we know that change is the only constant. And so pretty much you can expect good times and you can expect bad times, whether you're buying, a company that is trending great right before you buy it or trending poorly right before you buy it, right? So make business decisions and make acquisition decisions, okay, based on what an individual business will do, and then compare that to both the acquisition terms and the eventual exit terms that you will have, okay? So if you really think about it like that, and then you take this sort of like mid to long view when you buy something, right? Like I love these plans that we all are going to hold a business for 3 to 5 years, and here's what's going to happen, and then I might sell at the end and whatever. That's great, but the thing is that success has nothing to do with what you plan, and everything to do with how you manage through the unexpected. Okay? And so if you think about the mid to long term, so if you just say like, look, I'm going to buy this company, I'm going to own it for 7 years, maybe forever, okay? That's how I always think about all my acquisitions. And the reason is because 7 years is a sufficient amount of time to get a significant amount of equity buildup as well. Now, if you like way overperform and you actually grow that business rapidly over a 2-3 year period, I mean, you can always exit earlier if that's what you're wanting to do, right? But even, the only time you should really be thinking about like exiting relatively quickly is usually during a turnaround situation, right? Because there's a lot of immediate growth to be sort of created at that time. And so the thing is like if you take this mid to long-term approach and then you expect good times and bad times, build a great business that can endure through the bad times and thrive in the good times. And the way you do that is, simple, right? Great people, documented processes and procedures, okay? And just plan to work for the mid to long term, okay? And get in there and work and actually lead and manage and work on your business, because that's the thing that actually gets you through the bad times. That's the thing that helps you get through the great times. And I like to always keep a scoreboard in terms of like, what would my company look like if I were to exit today? What would the exit price be? Because in a privately held company, it's the only way to actually have kind of a publicly traded stock price as you were, right? Like what's the value of the company today, right? So brief example, I ended up buying an $8 million revenue company just before the Great Recession of, let's call it '08, okay? I bought the company in '06. In '07, things got pretty rocky in our industry. In '08, everything went to hell in a handbasket, and I worked a lot and managed through, and it ended up being about 7 years after I bought it. It ended up being my first exit when the economy rebounded. We had implemented some sort of newer things going on in the industry and caught some trends, and it sort of kept us flat during the disaster times. Okay, and then when the economy sort of bounced back, we were ready, and ultimately I got my first exit as a result of that. Right, so I think a lot of times we're sort of thinking about, is this a good time or is this a bad time? And sure, you want to buy low and sell high, right? But the second you take that mid to long-term view, okay, you're going to have equity buildup, you're going to have appreciation, assuming you're working in the business, you're going to have appreciation of value. And, ultimately, as long as you have the right mindset and you're able to use a growth mindset and have faith that you're going to make it, right? Even in the darkest hour, okay, you will make it, because you are the one that's making the decisions, right? That's sort of piloting the plane while everyone else in the back is talking about economic forecasts, okay? At the end of the day, when you make good business decisions, okay, do the math. What the interest rate actually is, okay, whether it's, if prime is, 0 or 2.5 or 6, okay, or inflation is going or not, should have only a very immaterial impact on the business that you're operating, okay? So there's never a bad time to buy a good business, all right? So keep that in mind. Listen, we created the Acquisition Lab to try to unpack buy-side advisory services for acquisition entrepreneurs. We're a vetted community. We've got world-class education, a suite of tools, group coaching. If you are considering buying a business in the next 6 to 18 months, please check us out, consider applying, and we'll see you on the inside. Thanks so much.